In this video, I'm taking you step by step and opening up a Roth IRA with $1,000. We'll talk about what exactly the Roth IRA is, some pros and cons of it, and why most people can greatly benefit from it. And of course, the video would not be complete if I didn't show you exactly how to do it step by step. So I'm going to open up a Roth IRA account live for you to see so that you can then go and do it by yourself. Let's start by discussing what exactly is a Roth IRA. A Roth IRA is a type of individual retirement account that you can use to invest and build your wealth for retirement. Now, when you think of a Roth IRA, I don't want you to think of it as an actual investment, right? Like you've got investments like stocks and bonds and real estate and ETFs. These are all different types of investments. The Roth IRA itself is just an account that holds those investments. But I think the most important thing, just to not overcomplicate this, is to remember that a Roth IRA is basically just a standard brokerage account. The only difference, though, is that it comes with some really big advantages that we'll discuss right now. And that actually brings up the next part of the video, which are the pros and cons of a Roth IRA. Starting with the first pro, which is that Roth IRAs are tax-free. So let's say, for example, that you've got two different accounts. One account is a regular brokerage account, and then the other is a Roth IRA. Within both accounts, you've consistently invested for the past 30, 40 years, and both accounts have grown to $1 million. The only problem, though, is that the standard brokerage account would not actually be worth the full $1 million, because after taxes, it would actually be worth closer to $600,000 or $500,000, depending on where you live. On the other hand, though, the Roth IRA would actually still be worth $1 million. How is that so? Well, it's because all of the money that you make inside of the Roth IRA, all of those capital gains and the profits that you've earned over the years are not taxed. And that is by far the biggest advantage of the Roth IRA. The next pro is that with the Roth IRA, you are allowed to withdraw your contributions at any point, even before retirement. Now, just to really quickly clarify, okay, it's critical that you understand the difference between a contribution and an actual earning within your Roth IRA. Your contributions are the money that you add into the Roth IRA. So let's say you put in $1,000 into your Roth IRA, and then a couple of months later, you have this emergency and you don't have any money saved up in your savings, and so you have to take out that $1,000 that you contributed to your Roth IRA. Well, believe it or not, that's not a problem, and you can do that without incurring any penalties. But let's say that during that period of you investing that $1,000 that you ended up earning $500, and so that $1,000 actually grew to $1,500. What you can't do is take out that $500 because that is considered a capital gain. So you can take out the $1,000 because that was the principal, that was how much you actually put into the account, your contribution, but you cannot touch the actual gains from the investments growing. If you simply cannot help yourself, your hands are too sticky and you have to take out that $500, then I'm afraid Uncle Sam and his nonprofit, the IRS, will first make you pay taxes on those gains, and then you'll be required to pay a 10% early withdrawal fee. And the final pro is that Roth IRAs do not have required minimum distributions, or RMDs. So most tax-deferred retirement accounts like 401ks or SEP IRAs, traditional IRAs, 403bs, they all require that you start making minimum withdrawals from your account after you turn 72. So you can't just keep your money inside of your retirement account and watch it continue to grow and compound. Uncle Sam doesn't like that because he wants to be able to start collecting taxes on those withdrawals. However, this isn't a problem with the Roth IRA because it does not have an RMD. So you could literally wait until you were, 80, and you would give yourself like 2 extra decades of your investments growing and compounding. I mean, we're talking about millions of dollars in potential investment gains depending on the size of your account. Okay, so the first con of a Roth IRA is that they have pretty small maximum contribution limits. If you look at other retirement accounts like the 401k, for example, which has a maximum contribution of $20,500, and then if you're over 50, $27,000. But when you compare this to a Roth IRA, which has an annual contribution limit of only $6,000 or $7,000 if you're over the age of 50, that's a pretty small number. The next con is that Roth IRAs have income limits. So as you can see from the chart on the screen, if you earn over $129,000 per year, your contribution limits will start to decrease as your income increases. You can see that if you earn over $144,000 or more per year, that you will not be eligible for a Roth IRA. And these numbers are of course different depending on if you're married and depending on how you're filing your taxes. And those numbers change all the time, almost on a yearly basis. And so by the time you're watching this video, they may be higher or they may be lower. And the final con, if you even want to consider it a con, is that with Roth IRAs, you do have to pay taxes up front, which means that the money that you contribute into your Roth IRA has already been taxed from your income by the IRS. Okay, so that's different from a 401k where the money that goes into that account is not taxed, but the money that comes out of that account is taxed. Let's transition now into actually opening up the Roth IRA. You can open up a Roth IRA with virtually any broker. So some of the best examples include Fidelity, Vanguard, Charles Schwab, M1 Finance, and of course there are a ton of other brokers out there. It really comes down to your personal preference which one you want to go with. If I had to give you my top 3, I would say Fidelity, Vanguard, M1 Finance, in that exact order. But for this video, I'm going to be using Fidelity, but just understand that you can go with any broker, and the process for opening up the Roth IRA is for the most part going to be the exact same. Okay, here we are on step number 1, which is opening up the Fidelity account or whichever broker you decided to go with. So on the screen right now, what you'll see is Fidelity. Okay, you can either get here from your computer by going to fidelity.com, or you can also download the Fidelity app on your mobile device and just do it that way. Okay, so back to my computer now. What I'll do is click right here where it says open an account, and then you should see this window pop up. On the left-hand side of this window, you'll see an option for Roth IRA, and then you'll just click the button that says open now. Next up, you'll land on this page, which will ask you if you're already a Fidelity customer. If you are, then just sign into your account and it'll save you like 15 extra minutes of having to fill out information. If you are not a Fidelity customer, then you'll have to click no, at which point you'll have to create your account. This part will take a few minutes. You'll have to answer like a few administrative questions about your income and about your job and just like who you are. You'll have to agree to some investing documents. It's all pretty standard stuff, and it's going to be the same for every single broker, so nothing new here. Once your account has been created, the next step will be funding your Roth IRA and making your first contribution. Keep in mind, you're not required to make a contribution right here, right now. If you want to just go past this part and then wait, a couple months down the road to make your first contribution, that's totally fine. So you've opened up your Roth IRA, you've moved some money into your account. Those are both really big steps. Now it's time to actually choose what you're going to be investing in. When it comes to investments, there's a lot out there. I mean, you've got stocks, bonds, ETFs, mutual funds, REITs, real estate, options, annuities, banking products like CDs. Ignore all of that, okay? It's all just noise. In order to really start building your wealth and investing inside your Roth IRA, I want you just to focus on one of these investments, and that's the index fund. If you don't know what an index fund is, the easiest way to think of it is as a basket, right? So you've got this basket, but within that basket are hundreds and sometimes even thousands of different stocks. What's really great about index funds though is that if you can choose the right one, which I'll help you with that in a second here, but if you pick the right one, it's basically just going to allow you to have a broad, diversified, high growth portfolio without having to do any work, any research. If you know nothing about the stock market and how investing works, it doesn't matter, because all you have to do is just choose the right index fund. And that actually brings me to my next point. By far, the best index funds to buy are the ones that give you broad exposure to the entire US stock market. So a really good example of this is FSCAX, or the Fidelity Total Market Index Fund. This index fund holds about 3,875 stocks in it. And so when you buy shares of this index fund, you're essentially giving your portfolio exposure to all of those stocks. Companies like Apple, Microsoft, Amazon, Google, Tesla, and the list goes on. And so all of those stocks are in one single index fund. And so when you buy a share of that one index fund for, say, $120, you're getting exposure to all of the thousands of different stocks that that index fund has. Now, just one important note, okay? FSCAX is a Fidelity index fund. So if you, say, for example, went and opened up a Roth IRA with Vanguard or with M1 Finance, then you wouldn't be able to invest in FSCAX specifically. However, every single broker is going to have basically their own exact equivalent of another index fund. So, for example, Vanguard's equivalent of FSCAX is VTSAX. Okay, VTSAX is another total market index fund that will give you exposure to a broad selection of different US stocks. If you opened up a Roth IRA with a broker like M1 Finance, who doesn't have any index funds of their own, that's no problem, because you can simply invest in an ETF or an exchange traded fund, which is basically the same thing as an index fund. And a really good ETF to invest in is VTI, or the Vanguard Total Stock Market ETF. Investing in this ETF will give you complete and total stock market exposure. Okay, so here we are back on the Fidelity dashboard, step number 4, which is going to be buying the investments. So we're just going to click right up here in the top left hand corner where it says trade. And when you click that, this window right here is going to pop up, and you'll see a few different options. It might seem kind of confusing, but I promise you it's super easy, okay? If you want to invest in an index fund, so if we're using Fidelity, the index fund that I would recommend for total market exposure would be FSCAX, okay? So what you'll do is you'll click right here on this drop down that says stocks/ETFs. You'll click on that, and you're actually going to choose mutual funds, okay? Once you click on that, you're going to select your account, which is your new Roth IRA. So you'll make sure you select that. It's going to show you how much cash you have available to trade. It should be whatever you contributed. So in my case, it's $1,000. So right here where it says symbol, this right here is where you'll type in FSCAX. And then when you type that in, you'll see it pops up right there, the Fidelity Total Market Index Fund. So you'll click on that. It's going to show you the current price of the index fund. And then directly below the price of the index fund, you'll see this drop down right here that says action with 3 options: buy, sell, exchange. We're going to buy the index fund, and then it's going to ask for the actual dollar amount. I'm going to enter in 1,000 because I want to invest the entire $1,000 into this index fund. It's going to give you this window right here, which just gives you a really quick rundown of what you're about to do. And once you have read through that and have agreed that that's what you want to do, then you're just going to click on confirm. Okay, so once that order goes through, just so you're not confused, index funds are a little bit different from like stocks and ETFs, right? With a stock or an ETF, when you buy the stock or ETF, it shows up in your account right away because that order gets executed right away as long as the stock market is open. Index funds work a little different, okay? With an index fund, the orders are only executed once per day, and that's at 4 p.m. So let's just say, for example, you placed an order to buy an index fund at 5 p.m. on Tuesday. Well, that order is not going to be executed until Wednesday at 4 p.m., okay? And so the entire day on Wednesday, you're not actually going to own the index fund yet until that order is executed on Wednesday at 4 p.m. If you don't really like the idea of not having control over your investments and being able to buy and sell throughout the day whenever you want, I would recommend you go with ETFs. And so, for example, VTI would be a really good example of a total market ETF to invest in. So that's basically it. Once the order is executed and you actually own the ETF, it's going to show up right here in your account under portfolio, and then you'll be able to see what you actually own and how it's performing. Anyways, that's it for this video. Hey, thank you so much for watching. It means the absolute world to me. It really does. And as always, I will see you again very soon. Take care.